So if you've been keeping an eye on the Southern Ontario real estate market, you've probably noticed things are, well, a little weird right now. Yeah, prices are down, but it doesn't exactly feel like a buyer's paradise, does it? Okay, let's dive right in and break down what was really going on in February 2026. You know, this quote from a TRREB poll just nails the vibe perfectly. We've all heard of FOMO, right? The fear of missing out. Well, that's gone. Now it's all about FOUFU, fear of further uncertainty. It's this feeling that has everyone, buyers and sellers, just kind of holding their breath, and it's shaping the entire market. And that, of course, leads us to the million-dollar question we're tackling today. In this new world of FOFO, who really has the upper hand? Is it the buyers, since prices are a bit lower? Or is it the sellers, because they're not putting as many homes up for sale? Let's figure it out.
Okay, so to answer that, we've got to get our heads around the market's big contradiction. Seriously, it's this puzzle that explains why everything feels so off at the moment.
So here's the key idea you need to grasp. The market is cooler, but it's also tightening. What does that even mean? Well, cooler is easy. Sales activity has slowed down. But tightening means the number of new homes for sale has dropped even faster. And that creates this really weird tension in the market.
All right, let's look at the numbers because they tell the whole story. You can see home sales dropped by about 6.3% compared to last year, and the average price down a little over 7%. Okay, that makes sense. But the real headline here, the number you absolutely need to pay attention to, is new listings. Because while sales and prices softened, the number of new homes for sale just cratered. How much? Well, yeah, a whopping 17.7% drop. So think about it. Buyer demand kind of tapped the brakes, but sellers pulled the emergency brake. They just stopped listing their homes. And honestly, this is the one thing holding the market up and preventing a much bigger price drop. So what does all this mean for you, whether you're thinking about buying or selling? The game has changed. Let's break down the new playbook for both sides. All right, if you're a buyer, listen up. You've got more choice and way more time to think. And guess what? Conditions are back. You can actually have a financing or inspection clause in your offer again. What a concept, right? Now, for sellers, it's a different story. The days of listing high and watching a bidding war erupt are over. You have to price your home for right now, not for 2 years ago, and you need to be patient. Think 30 to 60 days on the market, and yeah, you're going to have to be ready to negotiate. But of course, Southern Ontario isn't just one giant market, right? It's a bunch of smaller, unique markets, all with their own little quirks. So let's take a quick road trip and see what's happening in some key areas. First stop, we head east to Durham Region. This is still the place for value. It's a magnet for commuters and first-time buyers who want a shot at a home, but need that easy access to the GO train and the 401 and 407. Now let's swing over to Hamilton, Burlington. Things here are surprisingly balanced. About 3.2 months of inventory means neither buyers nor sellers are really in control. But the hot ticket item? Townhomes, especially the ones you can walk to from a GO station. Buyers are all over those. Okay, now this is fascinating. Check out Waterloo Region. You've got a tale of 2 or even 3 markets here. See? Detached homes and townhomes are pretty balanced, around 4 months of supply. But then, look at the condos. Over 6 months of inventory. That is a straight-up buyer's market. If you're looking for a condo in Waterloo, you are in the driver's seat. And you know that condo story in Waterloo? It's not an isolated thing. It's actually a trend we're seeing across the board. The kind of home you're buying or selling right now matters a ton. So let's zoom in on that. So if you look at the price changes from last year, yeah, everything's down. No surprise there. Detached homes, down about 8%. Townhouses, down a bit more, between 8 and 10%, but just look at that bottom row. Condo apartments got hit the hardest, down more than 11% in Toronto proper and over 10% in the 905. This chart really makes it pop, doesn't it? The slice of the price drop pie for condos is just so much bigger. This segment of the market has seen the biggest correction by far, and that spells opportunity. So what does this mean in real dollars? It means the price to get your foot on the property ladder is lower than it's been in a long time. I mean, for a first-time buyer, seeing an average condo price in the suburbs under $550,000, that is a huge deal for affordability. Okay, so that's where we stand right now. A market that's kind of balanced, maybe leaning a little towards buyers with a massive spotlight on the condo opportunity. But the question on everyone's mind is, what happens next? Well, the forecast for the next little while is pretty interesting.
The first part of the year, Q1, is probably going to stay pretty much the same, cautious, flat. But then in Q2, that's where things could get spicy. If listings stay this low, competition could really pick up again. And the big wild card? Interest rates. Even a hint of a rate cut could open the floodgates for all the buyers who've been sitting on the sidelines.
And that leaves us with one final question to think about. For the first time in a long time, buyers have more choices, more breathing room, and more power to negotiate. So in a market that's all about the fear of further uncertainty, maybe the biggest risk isn't making a move, but instead waiting for that perfect moment that might never actually come.